Good day, everyone. Welcome back to Fighters Trading Channel. Back again with a weekly flows video. It is Sunday, the 30th of March, 2025. We are at the end of the month, about to step into April, and let's look at what the markets have given us and where we can profit moving forward. So, starting with NAS 100 on the monthly time frame. We can see that March we've closed out extremely bearish. So taking a look at the previous months, we can see a lot of bearish candles at play, bearish pin bars closing with certain dojis, lots of indecisions. But this month that has passed, we have confirmed that the bears are very much in control. The bullish trend line that we have at play is currently being broken or potentially even tested. Looking at the 50 SMA, the moving average, price is comfortably trading above it, but it seems that we are in a deep retracement phase and we could potentially be there for the medium term until the markets turn around. Looking at RSI, we have moved out of the overextended region back within the between 50 and 70 range, which is a bullish confluence from a monthly time frame. Coming into the weekly, we can see strong bearish confluences. We have strong bearish candles coming into play. The markets had a bit of an indecision week prior, on the week of I think it's the 17th, if I'm not mistaken. Closed with the indecision, but this previous week, the bears have come back into play and they have broken cleanly beyond the trend line. Looking at the 50 moving average, price is comfortably trading below the 50 moving average in the weekly. And we're looking at RSI, we're seeing that we are below 50, above 30. So thus we have three bearish confluences coming out of the weekly time frame, confirming that the bears are in control and the markets are currently going down and we are still looking for shorts within the space. On the daily time frame, we have the markets did have a certain level of retracement and we could have potentially kept going higher as we broke back above the bullish trend line, which was evident on the higher time frame. But the markets had a sharp turnaround on Wednesday. We had an evening star formation followed by a bearish confirmation and a strong bearish push on Friday. Friday was an absolutely bearish day, very unexpected, but nonetheless the signals were given prior and the bears pushed strongly on that day. So let's just analyze this pair, see what's happened with the bearish move thus far. We can see that the pair found resistance at 22,100. This was around the 19th of February 2025, and we had analyzed this pair. We had noticed the bullish change, the bullish shift in the market, and it has since been moving steady. We noticed the bearish shift in the market, and the market has since been moving steady bearish. We've had a few retracements here and there, but for the most part, the bears have been in firm control, and we've broken major levels of support at 20,800. We've retested this level once around the 3rd of March, and we've continued moving with the bearish momentum. Taking a look at the indicators on the daily, we can see that price is comfortably trading below the 50 moving average with the RSI between 50 and 30, which is another bearish confluence. So from the weekly time frame and the daily time frame, we can clearly see the bears are in control. Now, I would continue trading shorts within this pair. Although we found support, I don't think it's strong enough support and this market will keep falling. Thus, shorts are at play. I was looking for some long positions heading up here, but again, I began to recognize that patience is the name of the game, and sometimes you just got to stay out of the markets until the momentum comes back in. So I did lose out on some valuable shorting opportunities here, but that's okay. We will make it up. as the market continues to move into the next month. Just to analyze any potential signals or patterns we have, we can just see obviously we can see the evening star play here, followed by strong bearish momentum, and of course our indicators. Thus, continuing to look for shorts. On the weekly time frame, again we have our three black crows, which is a strong bearish candlestick pattern. We have this bearish engulfing candle, very strong bearish engulfing candle at play here, and we would keep running with that momentum. Where could we potentially run to that moment with that momentum? I would say our next steady support level is at approximately 18,300, and I would be looking to short the markets all the way down to that level. Moving on to US 30. So US 30 on the monthly time frame, as we close out the month, we can observe we had a strong bullish push in November, followed by a bearish retracement, another bullish push, and now we're seeing an evening star pattern form right here, candlestick pattern form. So we have our bullish push, our indecision candle, which is a spinning top here in February, and then March has provided us with a strong bearish candle, which thus completes the evening star formation right there. With that evening star formation, clearly the bears are in control, and we will be looking for shorts moving forward. Per the indicators, we can see from a long-term perspective that price is trading above the 50 moving average, with the RSI between 50 and 30. Thus, very bullish confluences per the indicators, but alas, we have been waiting for a strong retracement, and it appears that we are in the market of retracements right now, and it is thus a bear market in, I would say, the medium term. Onto the weekly time frame. Price per the indicators, we are currently testing that 50 moving average, with price trading below 50 between 30, which is a bearish confluence. We have broken a strong bullish trend line, and we are currently looking to trade short all the way to the 38.700 level, which is also in line with the major trend line we have in play over there. So looking for shorts, we can see markets breaking below, retracing, currently testing the 42,000, I would like to say 42,750 level, 42,800 level, and is continuing to move down. We're seeing strong bearish confluences in this market. We have a bearish trend at play here, and if we go to the weekly, we can better analyze that. So the market's having a strong retracement, having investors thinking it's going back up. I, for one, also thought that this was a shift in trend, but markets found the pivot point at 42,800 and is currently moving with strong bearish momentum. So our trend line at play would be right here. Bearish trend line at play. So we have three touches. So 1, 2, 3. This is a confirmed trend, and we will now continue to look for shorts. Market currently in an impulse play, and we will have to wait for a retracement before we continue looking for shorts. But nonetheless, we know for a fact that the momentum favors the bulls at the moment. So, per the indicators on the daily time frame, we can see markets firmly trading below the 50 moving average, and we are sitting between 50 and 30 on the RSI. So, 3 bearish confluences on the daily time frame, followed by 2 bearish confluences on the weekly time frame. We are definitely in a short market at the moment, not to mention the extremely strong momentum coming out of the bears right now. Despite the bullish push that we did have from the 14th of March to about the 25th of March, this was not a sustained bullish move. This was just a liquidity grab, As you can see here, the strong bullish push that we had from the 10th of March down to the 15th, there was a lot of liquidity sitting in this area. The bulls in turn came up, grabbed this liquidity before shorting the market again, and therefore catching a discount zone with the short positions around 42,800. Now, the patterns forming on the daily, nothing that's really stands out, but this strong bearish candlestick, I mean, look at this Marubozu that is formed. It is just absolutely jacked on bearish momentum. It moved firmly down and thus confirms the strength of the bears in this market. I mean, if we were to go into a weekly, see what patterns formed, we can see that we have that wick rejection from the bullish retracement, which was unsustained, and the bears just absolutely decimated that market. Taking a look at the previous weeks, we can see the indecision candles upon the resistance at the 45,000. So what we can observe is that price finding that resistance at 45,000 had some indecision candles followed by a bearish engulfing candlestick or bearish Marubozu. Price sharply fell after those weeks. We had a bit of retracements followed by sharp dips in the market. We seem to have found some resistance here at the 41,800 mark, but price continuing to make bearish strides in its momentum. We can see the retracements do happen, the bullish retracements. We have some weeks of bullish retracements, but the bears always step back in, and thus we are definitely in a short market, and we will continue to look for short positions within the medium-term time frame. I'll be looking to take short positions all the way down to the 38,700 level, finding support upon this trend line before the market's pushing back up. So we still have a ways to go with the short positions, and thus definitely room to profit from these moves. So looking forward to seeing how this market shakes out from there. Obviously, we have a lot of structure at play. We can see we will have pivot points at the 40,180 mark. We could have potential pivots at 39,365, but these will probably be short-term retracements before the market continues to fall to the major support, which is at 38,661, or within the zone that I have marked out over here. So that is it for US 30. Let's move on to gold. So gold on a monthly time frame, very bullish. We can see the morning star formation pattern here, followed by the bear. Excuse me. So used to speaking about bears because of the indices. So we have the morning star bullish pattern, followed by the confirmation, the candle confirmation, and the market for March, bullish Marubozu. I mean, the strength, the sheer strength of this market is just amazing. We can take a look at the RSIs quickly. We can see we are in that overextended region, nearly tapping the 85 level, and we've been in there since October 24. So this is October, November, December, January, February, March. 6 months of an overextended bull market. And this market is just continuing to shatter all-time highs. It is absolutely surprising. So yeah, I mean, if you're a long bull player from this level, that is a fantastic place to be in. Moving on to the weekly, we can see that the market does have some sort of retracements, but nothing that's sustainable enough to correct the market. So continuing to go long on these positions, I mean, it's paying out, but you are taking a risk that when this market turns around, you can lose a lot of capital. So I would say if you are scalping, scalp the longs, get your money out, continue scalp, manage your risk. When the market turns around, you'll probably take a small loss compared to a big one if you are scalping and taking quick profits. But just observing the candlestick patterns here, we can see around the weeks in December, we had a lot of indecision due to the festive period. Whereas when Jan opened up, the bulls just stepped back in and we continued pushing higher. Despite the major bullish trend line we have here, we also have a mini trend which is sustaining momentum. I just want to correct this. I would like to correct this just a little bit. Perfect. Yeah, so we still have that mini trend at play there. Taking a look at the indicators as well, we can see we're comfortably trading above the 50 moving average upon the weekly time frame. We are in the overextended region on the weekly too, so overextended on the monthly, overextended on the weekly. So the fundamentals that is currently running in the market right now, and the fear that's in the market is definitely pushing gold higher as a safe haven. On the daily time frame, we can observe price trading above the 50 moving average, comfortably trading above the 50 moving average, as I might add. The RSI trading in the overextended region, but we can see more consistent breaks back towards the 50 consolidation point upon the RSI before pushing higher. You can see markets retrace, test the 50, and then continue to push higher. So this could be cause for, if it hits the 50 again, start looking for those long positions as the market moves higher. The structures being created, we can see the break and retest structures somewhat. Price moving higher, creating pivot points, finding supports. Markets moving in a bit of consolidation. We can see this consolidation phases before the major moves take place. If anything, the consolidation happens and then it's just bullish pushes. I mean, the last time we had the bearish push was we had some RSI divergence, strong RSI divergence. Markets corrected, thinking that it was going to be a major correction and keep falling. Markets like, no. We still got space to move higher, and it is just continuing to push. And this month we've seen major all-time highs. We've broken that 3,000 barrier, 3,000 an ounce barrier. And despite the consolidation and the nature of the market looking like it may turn around, the bulls just step back in and keep pushing this market higher. So my observations for gold would be that we will continue to see highs being created, consolidation points followed by highs. The market does need to correct from a higher time frame, and we are going to see that correction at some point. If anything, I would say take your scalps, get your short-term money, take $100, $200 where you can, pull your money out of this market, take new positions, wait for the corrections. At some point, this market is going to fall and you are going to lose a trade. But when you lose that trade, you're not going to be losing a massive amount of capital. You would be collecting 100 here, 200 there, probably getting to about $1,000, maybe losing 100 when the market turns around. But when it turns around, you can start looking for shorts. So that is just my opinion of the current market. Gold is just very, very bullish at the moment, and it is trading these all-time highs without any tradable structure for us. It is only once this market turns around that we can actually look to do something with it. But looking at the monthly, weekly, and daily time frames, we are definitely seeing strong bullish plays here. Euro USD monthly time frame. Let's just see what happened here. So Euro USD doesn't really make a lot of moves. I mean, we can see from the 23rd of Feb, even far back as Jan, we very much just found this consolidation, broad range consolidation phase that the market had moved into. It is only since October 24, we had a strong bearish push where the USD took control, and then we had a strong bullish push. So I'm not too sure if it's the bulls actually taking controls or if it's just a course correction of that major bearish push that we had late in the year in 2024. We do see that we had an indecision candle, and then we had a bullish push higher, and this month we closed with a major bullish push up with a small wick here, so a Marubozu formation with a small wick to the upside. So I would say that we're looking at the indicators. We have consolidation upon the indicators with RSI at 50 and price trading below the 50 moving average. I would say nobody's in control. I would say it's still consolidation. The bulls and the bears are finding fair market value in the spaces that it's currently at. And thus, the monthly is not really going to make too much of a difference here. If anything, we would have to use the weekly and the daily time frames. So let's move on to the weekly and see what we can see. The RSI giving us trading between 50 and 70, giving us a bullish confluence. Markets breaking above the 50 moving average, trading upon it, but still a bit of a consolidation phase there. But nonetheless, another bullish confluence. We had strong bullish pushes after a double bottom formation here at 2.021 and the strong bullish week on the 3rd at the beginning of the month, the 3rd of March, the beginning of the month. And the markets have just found fair market value and have just been kind of choppy and ranging and staying where they are at. On the daily time frame, we can see price trading far above the 50 moving average and trading between 50 and 70, which is another bullish confluence. So bullish confluence on the weekly, bullish confluence on the daily. Clearly bulls are in control, but we take a look at current or recent movements within the markets. We can observe markets have been moving with low bearish momentum, very low bearish momentum. So again, that's why I say markets are finding fair value right now. They're thinking price is cool where it's at. We're going to put a little bit of movements in the market, a little bit of bearish movements, but nothing significant that's going to shake it up. So right now, I would like to say bears are in control, low momentum, not really worth the trades. I would like to see the markets fall all the way back to 1.052 level. But it still has a long way to go. And I mean, we are not getting any signals that's indicating the bears are taking any sort of control that's going to kick momentum into the market and actually collect this liquidity that we can see here. Because I mean, this is massive liquidity that needs to be collected. I mean, we had a strong push there. So after this, I'm just going to be waiting. I'm just going to be observing. There's nothing I can do to scalp this market. There's some directionality on the 4 hour that we can take within the day, but nothing that's going to kick significant profits to us. So until I see a major bearish candlestick formation on the daily, I'm staying firmly out. We could potentially be seeing a break and retest level here at 1.083, but we still have a long way to go with that market. On Euro JPY, looking at the monthly, this market is just super choppy. I would say the bears are in control. But with saying the bears are in control, we had this major bullish, bearish candle in July, and we have thus just seen consolidation, where we'll have some bearish moves, bullish push up, bearish, bullish push up, bearish, bullish push up. So it's consolidative. So yeah, even if I take a look at the indicators, it's probably going to tell me 50. Yeah, we're trading above the 50 moving average. We're trading above 50 and 70, so bullish. But again, the observation is still just consolidation. So we can say bullish consolidation from a monthly time frame. On the weekly, we can see this more at play, where markets is moving up and down within a broad range consolidation. We are currently very close to the resistance. We can see the wick rejections coming into play with these last two weekly candlesticks formations. So we could potentially be seeing a breakdown where the bears take control of this market within the short term. The indicators aren't really giving us much on the weekly. We can see that price is just trading upon the 50 moving average, just below it, which confirms our bearish theory, while we just have a consolidative nature on the RSI at 50. The daily time frame, I'm actually going to remove this bearish resistance trend line. I mean, markets are testing it, but it's also not testing it. I mean, we broke above, came back, moved up, came back, so it's not really validated anymore as it was in the past without three touches. What is still validated, I would say, is the resistance level at 164.200. So price going back up there, testing and then moving down, I think it will probably give us more validity. So I would be looking for shorts in this market into this coming week, especially if this level here at 164.200 is tested again. Looking at the USD JPY patterns, so we can see per monthly time frame, the markets are just very choppy, very consolidated. We're very close to the 50 at RSI, trading above the 50 moving average, which is expected with the dollar just having the strength it's had over the past couple of years. But still very just choppy in terms of candlestick patterns. Per the weekly time frame, what we can observe on this is bearish nature. Price trading below the 50 moving average and the RSI trading below 50 and 70, which indicates more bearish confluence. So we have two bearish indicators followed by a bearish trend line. So from a higher time frame, we have bears in control. The structure created here is very much bearish with the higher low at 151.262 still intact. So weekly time frame bearish, looking for shorts. Daily reads another story. We can see 151.200 currently being tested. So structure tested. The bears step back in and continue making shorts. We're going to short the market. If it breaks above retest, pushes higher, we're going to take long positions. Per the daily time frame, we have price trading above the 50 moving average, currently testing 50 moving average, with RSI not really giving us too much indication. So, interesting week ahead for USD JPY. If the bears hold and actually give us bearish signals, we will short. If it breaks above, tests and keep pushing, we'll look for long signals. So, in terms of our major pairs, that is the technical and price action analysis that we have. We've obviously been able to analyze the close of the monthly time frame, and it's been an interesting month of March, to say the least. I mean, it's just been extremely volatile and weird, to say the least. I mean, we've had strong moves, but very just surprising, if anything. So yeah, US tech just falling. And then obviously having its retracements and then just continue to fall. Yeah, just an absolutely shocking month in the markets. I can't say that it's been like great for me. I mean, made some profits here, lost some in other places, but definitely need to do better into the coming months. Take a look at Bitcoin. Surprisingly mellow month. I mean, it just closes indecision. So lots of wicks, but pretty much indecision. Yeah, market's a bit low today. I'm not really going to take a look at the other markets. I think we've analyzed the main pairs. But yeah, that is our weekly flows analysis. We're hitting the half-an-hour mark, so I don't want to keep droning on. I hope everybody had a profitable month of March. Looking forward to seeing what comes into April. I'll definitely do an analysis for April in the coming days. But as per usual, trading is trading. You're always going to have to follow what the markets give you. But with that, please note that this is not financial advice, but rather my personal opinions of the markets. And I will catch you in the next video. Cheers, everybody, and happy trading for April.